A crazy wick on AMD. Yeah, let's just check the market before we get started. So we did close above 390, which is big, right? That's where you want us to close. You want us to close above this 390 level. If we close below it, I think it would have somewhere we see more downside next week. So we closed above it, which is pretty good. AMD, crazy wick. Yeah. I don't think it's a real candle though. I'd be very surprised if it's a real candle. Nvidia. It did get a crazy volume spike. So something must have happened on semis. Very interesting. Yeah. It is a good close though on SPY. Just gonna wait for about 1 more minute and we'll get started. We have a good lesson ahead of us today. So if I start too early, everyone's gonna be wondering about content that they missed. So I'm just gonna wait for a few more people to join in and then we'll be good. What did I have for lunch? I actually had pizza today. I didn't have Chipotle. All right, gonna give everybody one last shot to join. We have about 200 of you guys on. The last opportunity, you guys are winners. So the 200 that joined, you guys are winners. It's a little early on Friday. Usually I do these later in the day, but I wanted to just knock this out. So you guys have the content and then you can go enjoy the rest of your Friday pretty early. So let's get started. What I'm going to do in today's lesson is I'm going to cover my pre-market routine and watch list creation. I know this may not seem like an important lesson. I know many of you guys are probably like, hey, this is, a stupid lesson. It's not important. Who cares about Brett's routine? My routine doesn't matter, but I want to show you what I did that made me break out from a trader that basically broke even every single month for many months. Also lost money for many months to a trader that now consistently makes multi six-figure years, right? That's what I want to go over today, right? My whole goal is to show you sort of how I transitioned from a trader that literally would, have that scalping mindset, would break even, would lose $50, and then next day I'm up $75 and lose $100, and just that scalping mindset where you're sitting there all day and you're just trading the wrong stuff, and you feel like you don't really have sort of a plan, and you're just showing up. And this was something, I see a lot of traders have the same problem I had for literally, I would say probably the first year of my trading was like this. There was a point where I developed a very good strategy. You guys know my strategy. I trade the bounce and reject and break and retest. That is my strategy. But even with that strategy, even though the strategy, right, there is still a subset of rules you have to follow in order to be profitable, at least for me, right? At least for me. That is why you will see us. We're not really going to be trading Apple every single day or, Roku every single Tuesday, right? We're trading different names. And I think this is very important is watch list creation. This will make the difference between you being profitable and not being profitable. If it did for me, I'm also going to just generalize it and say it's also going to be the same thing for you. It worked for me. So that is my goal today, is to go over my entire watch list creations, pretty much process, what I look for. And one thing I want to note is, we'll go over that in a second. So one thing I want to note is when you're trading, right? I mean, everyone's at a different process in their journey. And I want to say this, I'm a full-time trader, so I'll wake up, around 7 o'clock. I'll, have a pretty set routine. But there was a time where I wasn't a full-time trader, and I want to make it clear that you don't have to be a full-time trader to be profitable. You just have to have a routine, right? You don't have to be up at 8:30 in the morning and have 6 monitors up in order to be a profitable trader. The goal is to at least have some pre-market prep or pre-trading prep before you jump into it. 9 to 5s are totally okay. In fact, before I was even profitable, right, for the first year of my trading, I was working a 9 to 5 on the side, right? It's very possible to trade a 9 to 5 and also break into the profitable sort of status when it comes to trading. And that's my goal today, is to not make this super exclusive. There's nothing exclusive about being a profitable trader. You guys can get there, right? You guys can get there. and the biggest hurdle, in my opinion, right? After you learn the strategy, after you learn how to trade the break and retest, after you learn how to do the bounce and reject strategy, you also have to learn how to pick the right stocks. Stock selection refers to the setups you're trading, right? And watching before you trade, right? If it's before market open, great. If it's at 10 o'clock and you plan to trade at 11 o'clock, that hour of pre-market preparation is very, very critical. Even if it's just 15, 30 minutes of just getting a grip as to what the market's doing, right? Out of the 4 major changes I made, and we're going to go through each of these changes over the next couple of weeks. I know personally, I plan to do, I think at least a couple sessions, at least one session per month with you guys, at least, right? So what I'm gonna do is I'm gonna go over these major changes, right, as I progress through this, through these webinars with you guys. One thing I want to make very important is, can you guys see my screen? I just want to make sure you guys can see my my actual presentation, because there was a time where I was presenting and literally I was just showing like a chart. So okay, cool, awesome. So my plan is to not just do one lesson and show you guys one thing I made that made the difference. I'm going to show you guys all 4 things, right? It's sort of like this is like part 1 of 4, right? Part 1 of 4 of the changes I made that made me a profitable trader. And stock selection was one of these, and was probably the most important one. It vastly increased my winning rate, right? Because there was a point where my win rate used to be around 50%, 55%, 60%. Now it's close to 85%, right? Or 80%. So that is a very, very big difference when it comes to trading. Going up 30% is big. And how I did it was through stock selection. So what does that really mean? So let's go forward in the slideshow and talk about what I look for when it comes to stock selection. Just for you guys that are joining, today's session is going to be very right to the point, right? So if you guys are missing anything, don't stress it. I'm going to post a recording for this as well, so you will have it. My plan is basically to go over my entire stock selection process, and then also go through 2 different trades I've taken this week, which utilize my stock selection strategy. So that's the plan. Okay, so slide 1. This is where we really get into it. We avoid predictive mindsets, right? This is the biggest hurdle for new traders. Trust me, the first 6 months, right? We all have this predictive mindset. Hey, Brett, is Tesla going to go up? Hey, Aristotle, is Roku going to go up? Hey, Felony, is Tesla going to go down? Nobody knows, right? We are not predictive traders. We are reactive traders. Most traders try to outsmart the market and predict what's going to happen before they happen. This is a fast track towards blowing accounts. We do not predict things. All we do is we find very, very strong stocks, right? Very, very strong stocks. And we look for pullback entries, break and retests, right? These are the type of things we look for, not predictive mindsets, more reactive mindsets. And what does that mean when I say predictive versus reactive? Well, that means, okay, if we are looking for a stock that's already moving on strong momentum and volume, right? You need to be looking for it to pull back to X level, or pull back to Y level, or break above Z level, right? These are the things we look for. The only thing we're predicting is that there will be some sort of reaction at that key level. So if you are waiting, if you're seeing Amazon go up, right? You're seeing it go up and up and up and up, right? And you're saying, hey, Brett, is Amazon going to go up more? Well, nobody knows that. But what I do know is, hey, there's a massive area of resistance here that it turned into support. And what I can do now is look for a pullback to that key support for a move up, right? All I am predicting, if there's any predictive nature when it comes to trading, is that there's going to be reactions in the key areas, right? And because of liquidity, because of market makers, because of supply and demand, there typically are reactions in these key areas. This is what we look for, right? We're not predictive traders. We are reactive traders. We're waiting for stocks to pull back to key levels. We're not going to buy off a green candle. What we're going to do is we're going to wait for it to close above and look for that pullback to our key area. Same thing with bounces and rejects. We're looking for basically pullbacks to that key area demand for us to go long or go short, right? So the idea here, the whole sort of premise behind the slide, is to show you guys that we are looking for stocks that are already moving on strong momentum and volume, right? And I know these words may seem kind of generic to you. I'm going to show you exactly what I mean by strong momentum and strong volume. So before I get started, you guys have any questions before I jump ahead? Because we're going to get into it. Any questions? Give me the no or yes. No questions. That's a good sign. So let's move on. We have a lot of, so now we have a lot of people on now. Cool. We have almost 400 of you guys. Cool. So pre-market movers, this is what I look for, right? There are two sort of things I look for when it comes to trading, right? Let me remove my drawings so it's not in the back burner here. Let's erase this. Where is it? Undo, undo, undo. Cool. So two things I look for. Number one is pre-market movers. Very, very important, right? I look for stocks that are already moving the most in the pre-market. These are strong names, right? Because they are strong in the pre-market, there is a correlation between it being stronger during the rest of the day, right? This is the idea, right? Looking for names that are strong in the pre-market. I'm going to show you guys what I mean by that. I'm going to show you my TradingView pre-market screener. I use this every single morning, right? I use this every single morning, specifically this one where I look for volume over 1 million, right, for bounces rejects, and I take the large caps. So basically using a 10 to 50 billion plus market cap filter. And then what I also do is I use a volume filter. So I'm going to show you what I mean by that in a second. And the second thing I do, right, so that's criteria one, right? The second thing I do is I look for a day two continuation, right? This is very, very important. Today I use this on Amazon, right? So day two continuation. Look for a big percent move in the previous day, and then look for a continuation that next day. Look for pullbacks that next day. So I'm going to show you a chart in a second, but what I want to do first is I want to show you my TradingView pre-market screener. So I'm going to zoom out here for a second, and I want to show you this very quickly. It'll take no longer than probably 5 minutes tops. So in TradingView, right, you can use this with TradingView, FinViz, Thinkorswim, Webull. Almost every single platform has some sort of screener, right? Every single platform has some sort of screener. The words may be slightly different, but the filters are exactly the same. So what you're going to do in TradingView is go to products, screeners, and then stock. Once you are here, what we're going to do is we're going to add a series of filters that basically look for the strongest names in the pre-market and the weakest names in the pre-market, right? So this is what we're going to do first. Go to the right-hand side, scroll all the way to the right-hand side. Press the three little dots over here. It's called the column setup. If you see it in the corner, let me just circle it so everybody can see it. Column setup. Press these three dots in the corner, right? Once you press that, what it's going to do is it's going to open up a series of additional columns. What we're going to do is we're going to add our first sort of feature. It's the pre-market change from open percentage, right? You guys probably have seen these filters before. I had a YouTube video on it, so many of you guys probably know it, but this is important for everybody who's new, right? So add this, take it, move it all the way to the left. What we're then going to do is we're going to set the volume to be over 1 million, right? Over 1 million. We're also going to set the market capitalization to be over 50 billion, right? It's either 10 billion or 50 billion. I recommend using 50 billion. The reason why is because these are going to filter out all those, the small names. So, it's not going to be pulling up random tickers. These are large cap, blue chip companies that will be showing up on your screener. So what this is doing, right, is it's only going to show us tickers that are over 1 million in volume and over 50 billion in market capitalization. What we're then going to do is we're going to go back to the left-hand side and we're going to filter by our change from open percentage. So what does this actually do for us? Well, what it does for us is it will show us how much these stocks have moved from its previous day close, right? Let me repeat that. How much these stocks have moved from its previous day close. So if, perhaps Baba or NVIDIA was up, 0.87% from its previous day close, these are names I may focus on, right? These are names I may look at for continuation, right? I didn't use this today because I really didn't see a whole lot of upside on anything, right? But those are names I might look for, right? Likewise, I can click it again. And what it's now going to do is it's going to show me names that are relatively weak, right? So you can see Wells Fargo, relatively weak, Shopify, weak, Goldman Sachs, weak, JP Morgan, weak. Why am I saying the word weak, right? The reason why is because they are moving down very aggressively compared to the overall market. These are some of the weakest, largest cap names in the market, right? So when I'm looking for tickers to trade, these are the first ones I'm going to look for, right? And there's certain things I do. So if this is one I never trade. I don't know how liquid it is, so I'm not going to trade these ones, right? But names that I do know, maybe JP Morgan, Wells Fargo, Goldman Sachs, Shopify, these are names I will look at for potential continuation to the downside, right? Likewise, the same thing is true for the upside, right? So if I were to turn on, the green one, right, it's going to show me names that are strong. So I may look for continuation on these names. So this is the pre-market screener. Very simple. I have another video in this if you guys want to see it. This is not the important part of today's lesson. Today's lesson is about price action, right? And looking for strong stocks based upon day one continuations. So what I want to do is I want to go back to this slide. So day two continuations after a strong day one, right? And what I wanted to show you here was the Amazon case example from today and also from yesterday, because I took 2 trades on Amazon. Amazon yesterday was even better. Today, I'm going to show you Amazon again. So let's go to the slideshow here. Let's go back to, the trading view. So on Amazon, right? Let's go back to the 5-minute time frame. What does a strong day two move mean, right? So when a ticker has a strong day one, right? So strong day one. All I'm looking for on day two is a continuation move on day two, right? Day two continuation, right? This is what's important. So what does this actually mean? Well, once it has displayed to me that it has moved up very aggressively in its day one, and what does that mean? Well, let's do this. Measure the move from the low to the high of Amazon. That's a 6.27% move to the upside, right? Whereas let's overlay SPY to this, right? How much did SPY move relative to Amazon, right? Amazon moved a lot, or SPY moved a lot less than Amazon, right? You can see SPY's move was just about 2.5%, whereas Amazon was almost 6%, meaning Amazon is just about 2 to 3 times more aggressive than SPY, right? So this is a strong day one move. And on day two, all I'm looking for is continuation, looking for a pullback on this ticker. So I'm not going to be trading a name like, Apple or Roku, right? Because, Roku, these guys are pretty much flat. I'm going to be trading a name like Amazon because it was such a parabolic move that day one, right? So day two, looking for a pullback. And where do you actually find your pullback entry? Well, this is not meant for today's lesson, but what I'm going to do, because it's Friday, I might as well just go over it. I'm going to show you why I picked this level on Amazon and what I was looking for. So on Amazon, right, you can see here, let's go to the slideshow. On Amazon this morning, I was watching was that the right trade? That's the wrong one. This is the right one. Let me see. Was it 94.50? Oh, wait, no, 97.50. Okay, cool. There it is on the bottom. 97.50 to 98 bounce. So why was I watching that? Right? Let's run this. Why was I watching that? So big aggressive move to the upside, right? Big day one move here, right? And big overall aggressive move. So where can I look for a pullback? Well, all I'm going to do is I'm going to look for a demand plus confluence entry. And what does that mean? So run a fib retracement from its swing low to swing high. And all I'm doing is I'm noticing here that we have a 23%, a 23.6% retracement lining up perfectly with our key hourly demand zone, right? And what does it mean, right? What does this mean? So we have our retracement level, our 23.6, lining up perfectly with our key demand, right? 97.50 or 98 to 97.50, right? We have a very key demand zone lining up perfectly with our retracement level. So I knew that after this big day one mover, I'm looking for a pullback into this demand for me to buy calls, right? So when you guys were asking, hey, Brett, what's a bounce play? This is what a bounce play looks like, right? Looking for a very strong move up, right, on that day one. And then day two, we're just looking for a pullback into our key demand zone, right? Our demand zone are defined by the hourly and 4-hour timeframes. I know you guys are probably going to ask about that. That's definitely another lesson we can do, right? We can definitely do another lesson on supply and demand. But today's lesson is about sort of finding names in play, right? And what's important, and the whole sort of reason behind me showing you guys this is because this is what I look for, right? A strong day one mover. This is what I look for. A big day one move and then a pullback into my key demand zone for me to go long into it, right? Looking for a pullback entry into my demand. And you can see how perfectly it was today. Came right into it, bounced off of it, right into it again, off that second bounce entry, bounced right off of it, right? Very, very perfect balance play on Amazon today. And the reason why I was even watching this name is because of that day one mover, right? This is what I look for. Now I do have another example on Amazon, which we're going to go through. What was FedEx? We can check FedEx after the session. But what I want to do next is I want to go over another example. Do you guys have any questions on this? How do you find the range? John, it's based upon the hourly time frame, right? So if you go to the hourly time frame, we're just looking for pullbacks into our demand zone, right? So you can see here that the demand, right, if I just remove all these labels, is defined by the 50-cent range between the highs of the bottoms of these wicks, right? The bottoms of the wicks here versus the bottoms of the bottom of this wick here, right? This is the demand zone. The reason why is because you're encapsulating this entire level, right? This level to level demand zone, right? That is why I'm using that 50-cent range on this demand. Yeah. And then what I'm doing, right, is I'm not only playing the balance play off the demand zone, I'm playing the retracement, right? So I'm also looking for a pullback into the retracement because it lines up perfectly with my demand, right? Can you guys all see that? When people say the word confluence, right, this is, this is probably like 3 or 4 lessons ahead from now. But when people talk about confluence, this is what they talk about, right? They're talking about pullbacks into an area where you have demand zone combined with some other technical reason for an entry point, whether that's a retracement, whether that's a moving average, something else has to be there, right? In this case, it's the demand zone combined with the retracement level. Use RVol, yeah. So the other sort of criteria I look for, right, is RVol, right? So let's go back to this for a second. So you guys know about pre-market movers. So basically, in this sense here, right, I'm looking for tickers that are moving the most in pre-market, right? So maybe FDX was an example. FDX reported earnings on day, I think it was on, I believe it was Thursday, or I think it was Thursday, yesterday, right? FDX reported earnings on Thursday. So what I may look for on FDX is a bounce play on it, right? The reason why is because it was a pre-market mover, right? This is what I look for when it comes to pre-market movers, is looking for names that are moving very aggressively off the open, whether it's a news catalyst, an earnings move, or just overall sector strength or weakness, right? So if I, this morning, if I wanted to play downside, right, if I wanted to buy puts today, it's more than likely going to be on the bank sector. Why would it be in the bank sector? The reason why is because when we went to our pre-market screener, it was showing us that the banks were the weakest, right? So this was the sort of sector I would want to be focused on for puts, right? And then FDX, Amazon, maybe NVIDIA, those are names I would want to be focused on for long side continuation, for call continuation. Reason why is because they were strong in the pre-market. This is what I look for in terms of pre-market analysis. When it goes to day 2 continuation, Amazon would be a key player. Reason why is because it moved so much more than SPY in its day 1. So all I'm looking for is that day 2 move, right? A pullback into its day 2 move. So Amazon's a good example. Another good example of this would be NVIDIA, right? You can check out NVIDIA, same deal, right? Strong day 1 move, looking for a day 2 continuation. That is what I look for. So let's move on. I want to show you guys one more example on Amazon. This is very, very important. I want to walk you through another case example on Amazon, right? This was very, very simple, right? Very, very simple strategy. I showed you guys a bounce play, right, on Amazon today. I'm going to show you an Amazon break and retest from yesterday, right? This is a very, very good trade to go over. So I got into Amazon around 9:56 in the morning, right? Let's go over why I got at 9:56. So the reason why I want to do this is because not only is this a good chart to show you, right? Not only is this a good chart to show you, it's also a good way for me to talk to you guys about break and retests. So we can cover 2 birds with 1 stone. So let's jump into a clean chart here in Amazon, and I'm going to go over what I was watching on this name. So what we're going to do is we're going to use the replay feature here, and then we're going to jump ahead to just about here and back to the hourly time frame. So at this point in time, I'm pretending as if it's Thursday, right? And on Thursday in the morning, right, all I'm seeing Thursday morning was that we have a very strong push in Amazon. The overall market looks strong, and Amazon is pushing up in the pre-market, right? And for that reason, I see a nice clean level here at 96.60. So if you go in the hourly time frame, you'll see exactly what I'm talking about. What is supply? Well, what is a key resistance? This is what a key resistance looks like. You see all of these wick rejections coming in at the exact same area, 96.60 to about 96.70 and change, right? This is a very, very small range where you have a very tight supply, right? You can see here, strong name approaching a major supply. So what are we going to do here? What we're going to do here is we're going to wait for a break and retest, right? And why would you look for a break and retest rather than a rejection? Well, the reason why is because we're so strong. If you guys remember our price action video, remember we talked about price action. What is price action? Well, price action is a combination of 2 things. It's a combination of volume and the overall candlesticks. What do you guys see about this volume to the upside? As you're moving up higher on the hourly time frame, the volume is massively, rapidly increasing, right? Indicating to me that buyers are becoming more interested at these higher price points. So all I'm going to wait for on Amazon is for us to break and retest this 96.60 supply, turn it into a support for a move higher. So the idea here, right, is why am I watching this in the first place? The reason why I'm watching this in the first place is because on that prior day, on the previous day, right, let's just move these drawings again. On the previous day, it had a very, very clean move to the upside, right? Very clean move. That's almost a 4% upside move, right? Compared to SPY, which is only about 1.5%. So Amazon was double as strong as the overall market, right? So on that next day, all I'm going to look for is for it to cleanly break above my supply zone, right? Turn it into a support and go long here, right? Looking for a continuation move higher. So if you guys remember, where did I execute Amazon? Well, I executed Amazon around this 950 and change. What time is it at? 956, right? So 956. So what was it doing at 956? At 956, it was breaking my key level, turning it into a support zone and retesting it as a support on this red and green candle, right? This is how I trade, right? This is what I look for. Why am I trading Amazon as opposed to Roku, right? Let's go to Roku or some random name. Let's look up a random name and see what Roku did, right? Well, Roku did move, right, on Thursday, but it's not as clean, right? This is not as clean price action as, say, Amazon, right? The reason why is because look how clear the overall structure is. Pulls up, retest our key level, move higher, retests, move higher, retests, move higher. Very, very clean structure and a lot more aggressive than it would be trading some random name, right? So the idea behind me showing you this example is not only to walk you through what I look for in terms of entering, right? I'm showing you why I'm even watching this. Why am I watching Amazon on Thursday morning? Well, the reason why is because it's sitting right below a major supply zone. It's very strong. And if it breaks above, we'll see a move into the next area of resistance. As you guys know, like how do you know where it's going to move into? Well, you just identify your targets and take profit into them, right? So this is how I structure it. This is how I structure 99% of my trades. And this is where it all comes down to, is just pre-market planning, looking for names that are already moving, looking for names that are approaching key areas of supply like this, looking for names that moved its previous day. This is what I look for. This is how I trade. And this is how I took my trading from, just coming in, scalping Apple every single day, looking for, maybe a continuation move in Apple, to, finding names that are strong, finding names that are clearly with the momentum, and then looking for a continuation. Today, for example, Tesla, right? Tesla was a very weak name, right? Why would anybody be trading Tesla today? Imagine trading calls on Tesla. Imagine if you were to say, hey, I want to buy calls on Tesla today. Look how weak this is relative to the market. If I were to look for a name that I wanted to short today, Tesla would be one of them. Reason why is because you can see Tesla is fading its yesterday's highs, right? The whole day it's been fading yesterday's highs and failed its long-term uptrend, right? So this isn't a name I would be trading to the long side. Whereas, perhaps Amazon is, right? Amazon is a name I trade alongside. Reason why is because it is holding these key demand levels so strongly and had a big day one move, right? This is what I look for. So let's go back to the slideshow. And I want to finish off with this slide. It's very, very important. So checklist. If you are a trader that trades the open, right, you want to be up about an hour before market opens. Now, like I said, before we started today's call, if you do not trade the open, let's just say you trade at 10:15 or 11 o'clock, you don't have to be looking at the market at 8:30. But what you have to do is at least give yourself an hour of planning before you jump into a trade. And why do you do this? Well, you do this because you're creating yourself a playbook, right? So every morning when I'm creating a playbook, what I'm doing is I'm scanning through the tickers that moved the previous day. I'm scanning through tickers that are moving in the pre-market, and then I'm charting my key levels. This is going to take you at least 30 minutes of time before you can even actually look for plays, right? And the second thing you're going to do, right? So once you're up at least an hour before you trade, it doesn't have to be 8:30, but it does have to be at least an hour before you jump into the market. You're then going to look at futures, right? See what the market is doing. If you don't trade futures, right? If you don't trade futures, futures are ES and Q, you can also just look at SPY and QQQ, right? You can look to see what are they doing in the pre-market? Are they moving higher? Are they moving lower? Are they holding key demand zones, right? What are they doing, right? And avoid fighting the overall sentiment. Are we approaching a key resistance? Are we approaching key demand? Are we gapping down the pre-market? These are all things you have to look for, right? And this is how I'm going to structure whether I'm looking for upside or downside. If the sentiment is bearish, right? So if we, for example, if we broke 390 today in SPY, well, what I may do is look for names that are relatively weak, right? Look for names that are moving down. This would be an example like Tesla, right? So Tesla would be an example I would look for downside. The reason why is because it was so weak throughout the whole trading day. Likewise, if the sentiment is bullish, right? If we're moving, higher in the pre-market, if we are above key levels, then what I'm going to do is I'm going to trade names like Amazon, maybe names like AMD, right? These are names that I will trade to the upside, right? This is what I look for. There are 252 days per year, right? Not every day requires a trade. There are days where you have FOMC events, you have long weekends, you have OPEX days, right? Today we had quad witching, right? So what does that mean? That means that we're going to have a lot of volatility, right? So this is going to be a day where you want to size small. But no matter what you are doing, no matter if it's a heavy econ day or Tuesday, Wednesday, Thursday, Friday, what you're doing is you're giving yourself time to get a feel for the market. You're charting SPY, you're charting QQQ, and you're looking for names that are moving the most in the pre-market and moving the most the previous day. This is what has made me a better trader. This is what brought me from a trader that would come in every single day and just trade Tesla or just trade Roku, right? That's not the right mindset. The right mindset is to trade names that are already moving, right? Because if they're already moving historically, there's a high likelihood it's gonna continue throughout the rest of the day, right? And you want to be trading names that are diverging from the market, not underperforming the market. So what I'm going to do now is, you guys probably have a million questions. I'm seeing a lot in the chat. So what I'm going to do is, I probably live in Hawaii, I have to get up at 3 a.m. Yeah. So if you don't trade the market open, that's totally okay, right? This is totally okay. What you can do is just make sure you give yourself at least an hour of preparation before you hit the buy button. That is what's important. I want to make it clear, for me, when I was working, so I worked a full-time job before I was trading full-time. What I would do literally, right, is I would have about an hour and a half of time, right, at my desk where I could focus on trading. So what I would do is at first 45 minutes would be solely for market preparation, looking at QQQ, looking at SPY, seeing what the overall market's doing. And then once I've gotten that down, right, I then will go through and execute a trade if I see a setup play out. That's what's important. It's not so much the time that matters. It is the amount of time you give yourself, right? It's not the actual, time on the clock. It's the time you give yourself for preparation, right? How do you look for a break and a retest versus a break and hold? Sean, that's definitely a little bit off topic with today's lesson, but what I will do is show you this, right? It's it's not a bad time to cover it. It's Friday. We can go off topic. That's okay. Let's close this out. Let's show you, right? So this is a good question. You guys probably have the same question. How do you look for a break and retest versus a break and hold? In my opinion, they're the same thing. Where is this? Where the chart? Okay, Amazon, found a time frame. Break and hold versus break and retest. It is the same thing, right? I structure it the same way. Break and hold versus break and retest means this, right? Wait for the stock to cleanly break above on the 5-minute time frame. Cleanly break above, close above your supply zone, right? Close above your supply zone. It is that very next pullback where you're going to get a long entry into, right? This is what I look for when taking break and retests. This is what I look for when taking break and holds. Now, when I say break and hold, I usually mean 2-minute time frame. So I usually mean wait for it to break above in the 2-minute time frame and then get in on that next pullback. When I say break and retest, it's more for the 5-minute time frame, right? And the reason why I say that is because Break and holds, when I say it, it's usually just more aggressive, right? More aggressive moves. The reason why it's more aggressive is because maybe there's high volume or crazy high momentum. So for that reason, I'm looking for break and hold. But they're fundamentally the same thing. The idea is you're waiting for it to clear that big supply zone, right? Clear it, 5-minute time frame closure above, and then you're getting in on that pullback, right? That's the whole idea. Likewise, if it was a break and retest to the downside, right? You'd be looking for this. You're looking for it to break below, let's just say 95, right? Break below 95, retest 95, move lower. So to answer your question, when I say break and hold, I'm usually talking about the 2-minute time frame. When I'm talking about break and retest, I'm talking about the 5-minute time frame. That's how I structure it. Can you explain why you didn't look for Microsoft as a strong day 2 continuation? Yeah, sure. Microsoft. No, Microsoft was for sure. Microsoft was a name I could have watched today, right? This was where I would have taken Microsoft is literally off of yesterday's highs. This was very clean. You sometimes, and the good thing about trading in today's market is, you can trade whatever name you want, right? Microsoft was just the name that I omitted, right? This was a beautiful bounce off of 276. You can see very strong day 1 move, strong pre-market, breaks above it, comes back in, retests at 11:40 a.m., move higher, right? This is what I look for when taking bounce trades. This is what I look for when looking for tickers to trade, is basically looking for 2 things, right? If there's anything I want you guys to get from today's session, if there's one thing, right? Because I know we're going around in circles, talking about all different stuff. If there's one thing, right? This is what I look for. I look for 1, day 2 continuations. And then secondly, pre-market strength. This is what I look for, right? This is the reason why I'm doing today's lesson is because I saw a lot of you guys asking, hey, why are you watching this ticker, or why are you not watching this ticker, right? This is what I'm looking for. So for example, today, I saw a lot of people trading crypto names. And I think that's really smart. You can see crypto names are very strong because there's very strong move day 1. Bitcoin's pumping, right? You can see that maybe it makes sense to focus on crypto names today. Coin, right? Coin, for example, absolutely ripped, right? This is what you want to look for. Breaking above a key supply zone. It has a strong structure, and I'm looking to buy calls, right? Would I buy calls on Tesla today? Absolutely not. You could put a gun to my head and tell me to buy calls, and I still wouldn't buy calls on this. The reason why is because it is so weak, right? This is such a weak name. I want to trade with the market, not against it. And how you trade with the market is you trade names that are moving, that are outperforming it, right? That are outperforming it. So Amazon outperformed the market, right? Microsoft, I think this is an even better example. So great example to mention to us is Microsoft, right? This was perhaps even better than Amazon. Clean break and retest, move higher off of a key level plus a day 2 continuation, right? This is absolutely key. Can you go over filters for stock selection? Walter, what I'll do is I'll post a recording so you guys will have it. If I answer the same question, I won't get mad. How do you get the green box? I use this. So if you go to the trading view, right? Rectangle, you can draw a rectangle and make it green, right? So that's what I do. Yeah. When it comes to trading view, guys, this is very, very important. Hit the time interval icon on the bottom here. And then what you're going to want to do is star each time frame. So if you're missing time frames here, it's because you don't have these. So make sure you have the 2, the 5, the 15, the hourly, the 4-hour, daily, weekly. So that's what I look for. How to use ATR in the market? I use it a couple different ways. I can do another lesson on that. ATR is average true range. Basically, it just helps me gauge how much the average candles are moving, right? How much on average it is moving, right? I don't want to go too much off topic from today's lesson. Otherwise, I'll just go on a tangent and we'll start talking about random stuff. Besides the retest, what do you look for confluence? Yeah, great question. So what I look for are 3 things, right? I look for 1. Key levels, 4-hour, hourly time frame. 2, pivot retracements. And 3, moving averages. This is what I look for. I don't really stretch away from this. This is These are the three things that define my entry points, right? So if I can find a confluence with one or more of these things, then I'm happy, right? So if I can find a confluence with, perhaps this level here, right? Let's just say, I haven't done a retracement on this, but let's just say, yeah, okay, cool, awesome. So why would I choose to get in off of this level versus this level? Well, the reason why I would choose the 38.2 is because we have a key demand zone lining up with the 38.2, right? So rather than using the 23.6, I'm going to use the 38.2. The reason why is because you have confluence, right? So you have 1 and 2 here. So that's what I look for, right? When you have multiple areas lining up, creating a confluence, this is where I'm going to find my entry point. So I wouldn't be getting in off of this random level. I'll be getting in off of this level. Can you use Friday's strong price action? Yeah, exactly, Barry. Yep, 100%. So let's just say what was strong today. Did you guys see any tickers that were very strong today? If you can find a ticker that was strong today, we can go over it. Basically, Coin. Yeah, so Coin. That's a strong name. So Coin, right? This was a strong name today. So what can we do going into it on Monday? So let's go the hourly time frame. Where can we find pullbacks on Coin? Well, I see a very key level here at 73.30, right? 73.30 is the key demand zone. So this is where I'll look to go long. Unfortunately, we don't have any confluence here. We just have one key demand zone, but this is an area where I take it, right? So this is how I'll structure it. I would look for a pullback into this level to go long. And this goes back to what we were talking about before, right? We're not predictive traders. I'm not going to predict this is going to keep ripping. What I will predict is that we will see some sort of reaction off the 73 level. We will see some sort of reaction off of this key level, right? Meaning if we pull back to it, I'll look for some sort of reaction off this demand for a move higher, right? This is what we mean when we're reactive traders, is we're not waiting for, hey, is this going to keep going higher, higher, higher? No, what we will do is we will get long into this demand zone for it to react off that level, basically. Yeah, but basically, Friday's price action, right, can be used and carried over to Monday. So that's exactly right. Yeah, GDX. GDX. This is another example, right? So where can you take GDX? Well, you look for a demand zone. Can we see anything? 30, right? Clear as day, right? Why is it clear as day? Massive demand zone, right? Massive hourly resistance or resistance turn support. This is where I would look to buy GDX, is look for a pullback into this level for a move higher, right? This is a very, very great trade. This looks great for Monday, right? Great setup. FTX, right? This is a trade that I wanted to go over too. Where would you want to go long in FTX? Well, FTX after a major earnings, right? Very simple. Previous support. Look at this. I haven't even opened this chart yet today, right? You can see as clear as day. Where is it going to bounce? Where is it going to show us some sort of support? It's previous resistance, 218. I can almost promise you this is probably also a retracement. Right? Almost perfectly, right? A little off there, about $1 off, but you can see, right? This is a nice area of resistance turn support. Strong day one move, strong pre-market move after earnings, right? Day two continuation, looking to go long off this key level, right? As simple as that. This is what I look for. This has completely erased my whole scalping mindset where I'm waiting for, oh, this and that to happen. No, I'm just waiting for my setups to appear. I'm waiting for it to pull back to my level, go long here, move higher, right? This is what I look for. Not sitting there taking 1 million trades per day, literally just taking 2 to 3 trades per day, focusing on names that are relatively strong, are relatively weak, and looking for, key levels to hold or key levels to break, right? What fib are you using? I'm just using the built-in fib retracement. So this is the, where'd it go? Here. This is the fib retracement. So if you do Command F or Option F, it'll automatically bring a fib retracement, and you can identify your entry points like that, using the swing low to swing high. I use the fib retracements only on the hourly time frame. So for me, I run it off the hourly time frame. Ellie, does supply and demand interfere with support and resistance? No, it doesn't, because really support and resistance, right? The difference between support and resistance is instead of having one key level, you're going to have multiple, right? So where could you identify another key resistance here? Well, I'd say the other key resistance here is perhaps at this, what level is this here? Let me just move this aside. This level is about 213 and change, right? The next area of resistance is maybe 216. So what I can do here is identify a demand zone, right? This is a level to level demand zone, right? You have a swing high to a low here, about 218 to 216 is demand on FedEx. So it's not going to interfere. It's only going to add confluence to my trade, right? If you have multiple areas of support, you can create it as a zone rather than one area on your chart, right? Rather than just having two different individual areas, you can sort of encapsulate the whole zone as one area on your chart. Yeah. John, I can definitely do a, what's it called? I can definitely do a video on my moving averages. Yep, Luis, basically just looking to encapsulate the whole zone. Are you looking for puts if the overall market is weak during pre-market and vice versa? Exactly. So, again, how I structure it is I look for names that are already moving, right, on strong momentum and volume, right? If it's strong in the pre-market, it's likely going to be strong the rest of the day, right? Or stronger the rest of the day. So what I'm going to do is I'm going to be focusing on those names for a long side continuation, right? Likewise, if it's weak, I'll be looking for put entries like Tesla. Like Tesla was pretty weak, so I'll be looking for Tesla puts below a key level, right? And just because this is very important, just to finish off with this, just because it is strong, right, doesn't mean I'm going to come in and buy calls immediately, right? Just because it's strong doesn't mean I'm going to come in and buy calls. What it does mean is I'm going to look for an entry point to buy calls, right? That is very, very important. I'm not going to, buy calls just because it's strong. I'm going to buy calls once it pulls back to my entry level. And the entry level is typically a key hourly demand or some sort of entry point, a fib retracement, a moving average, something else has to be there. Very, very important. Can you go back to the first slide? Yeah, sure. Absolutely. I know today's lesson was not as fun or exciting as price action or our other lessons and stop losses, but this is important, right? I know it's not as exciting. Trust me, I know it's not exciting, but this is a very, very important lesson. A lot of people overlook this. I see traders overlook it all the time. They're trading names that they just shouldn't be trading. It's like how it feels for me is going to the casino and better odds than everybody else. That's how I feel when I pick a good name to trade. I feel like a guy that's going to the casino and I have 65%, 75%, 80% odds, right? And that's a great feeling to have, right? That's the best feeling to have. Awesome. Yeah, and one thing I want to note too is if you guys are at point ever confused about what names to be watching, right? Just come to one of our pre-market routines, our pre-market our watch list. We do it every single morning, right? We do it literally every single morning. So every single morning at 8:40, 25 minutes long, we go through our entire watch list. And I think that's very, very important because as a new trader, you kind of want to figure out what other people are watching and what are they watching? Today you can see if you're to go through what we were watching in the morning, you'll notice that there was a big there were a lot of sort of similar names. AMD, Amazon, right? NVIDIA, these are similar names. There's a reason why we're all watching this, right? Even Felony was watching FDX. I didn't even see this. Beautiful trade, right? Absolutely beautiful trade. Why was Felony watching FDX? Reason why is because it had a very strong day one move. All he's doing is looking for a pullback into a demand zone, right? Very beautiful name, very beautiful trade. This is how you trade. John, no, it doesn't work the same for SPY and SPX. This sort of criteria would only work for individual names. What I want to do, I think at some point what we can do is my next lesson with you guys is going to be on supply and demand. And then after that, I think we're going to do a SPY trading class where I can go over how I look to trade SPY, like how I sort of find setups in SPY. Well, awesome, guys. Today's lesson was a little bit shorter, but it's Friday and I want you guys all to get to your stuff. Nick, I'm going to post it in the Zoom recording tab. So you guys will definitely be able to watch it. Don't stress it if you missed anything. Let me know what you guys think. Was it helpful? Not helpful? Was it boring? I know, guys, trust me, I know it was boring. But very important lesson. You'd be surprised. Some of the most boring lessons are the ones that are the most important. And for me, if I was a new trader, hearing me speak about this, I probably wouldn't think it's important, but it is. Awesome. Well, all right, guys. If you have any questions, going forward, just message me in the stocks only tab, and I'll try to get back to you today.